Welcome to the Stock Guy analysis. Okay, so picture this. Late November 2025, the crypto market just gets hit with this violent, gut-wrenching flash crash. Total chaos, right? Well, for most people, yeah. But for a select few, they saw the opportunity of a lifetime. This is really a tale of two completely different mindsets. And it all kicks off with one single number. $400 million. That's a huge number. And in just 60 minutes, that's how much money in leveraged long positions got completely wiped out. Just gone, liquidated. For anyone caught in that storm, it was just pure unadulterated chaos. And this quote, man, it just captures the whole vibe perfectly. Retail is screaming bear market, shaking out at the exact bottom again. You can just feel the panic, right? Everyday traders were absolutely convinced the bull run was over, and they were dumping everything right at the bottom. But here's the kicker. What if that exact panic was the signal someone else was waiting for? Alright, so to really get what was going on under the surface, we got to break this thing down. Let's look at the anatomy of this crash. What actually happened here? So it was just this sudden, absolutely brutal plunge. Bitcoin dropped something like $4,000 in just a couple hours. Ethereum, it just plummeted, hitting a low down in that 3,650 zone. This wasn't some slow, gentle decline. No. This was a violent liquidation event, and it caught thousands of traders completely by surprise. So, naturally, the first question on everyone's mind was why? I mean, what on earth could trigger such a sudden, massive market meltdown? So, was there some single piece of catastrophic news? A smoking gun that could explain all this panic? You can bet traders and journalists started digging for it, like, immediately. And they were looking for all the usual suspects, right? A surprise leak from the Fed, some new geopolitical flare-up, a corporate bombshell. But here's the thing, real-time scans of all the financial news, all the market chatter, they came up completely empty. There was nothing, no single big event to pin this on. Okay, so this is the crucial part. This whole crash wasn't caused by some new catastrophe. Nope. It was actually the violent end to a month-long market decline. You can almost think of it like a final engineered shakeout designed to just flush out all the remaining leverage in the system. I mean, a staggering $19 billion had already been liquidated that month alone. This was just the final brutal cleanup. And this is where the story takes a really interesting turn, because you have to remember, for every single person panic selling, there has to be someone on the other side of that trade buying. So, while one group was desperately trying to get out, another group was quietly and very, very strategically getting in. So you've got retail traders just capitulating, selling at a loss just to make the pain stop. But at the same time, the big institutions, they saw a golden opportunity. They weren't just buying the dip. They were methodically absorbing all that panic selling, strategically scooping up assets at a massive discount. And this chart, wow, it just illustrates the point perfectly. Take a look at the data for a company called BitMine, ticker BMNR. They're a major publicly traded company that holds a ton of crypto. Now get this. In just 13 days, around the time of the crash, institutional ownership of their stock exploded from 6% to almost 32%. That's a 5-fold increase in less than 2 weeks. Insane. And listen, we're not talking about small-time players here. We are talking about the absolute biggest names in finance. Morgan Stanley, BlackRock, Vanguard, ARK Invest, Panta Capital, all of them, they were all aggressively increasing their positions, just loading up while everyone else was running for the exits. Which of course begs the question, why were they so confident? What did they see that pretty much everyone else was missing? Well, the answer, as it so often is in finance, comes down to the math. It all starts with this number. At the time, BitMine was sitting on a colossal treasury of 3.63 million Ethereum. Now, to put that into perspective for you, that's almost 3% of the entire circulating supply of ETH, all held by just one company. That is a massive position. So, for these big institutions, buying BMR stock wasn't really just about buying a stock. It was way smarter than that. It was basically like buying a leveraged bet, a call option on Ethereum itself. See, because the company holds so much ETH, Any little increase in Ethereum's price gives this supercharged, almost exponential upside to the stock's value. It's a clever way to bet big on ETH, but with all the safety and structure of a regulated stock. And this wasn't some snap decision they made on the day of the crash. Oh no. This timeline here shows their relentless accumulation through the entire market downturn. Just look at this. They started the fourth quarter with about 2.8 million ETH. By late November, they were holding over 3.6 million. That means they aggressively bought up nearly 800,000 ETH in just 8 weeks at the exact same time prices were tanking. And here is the beautiful payoff they were calculating. This table lays out the simple but incredibly powerful math behind their big bet. Look, even a conservative recovery for ETH back to $5,000 meant a nearly 60% gain on their stock. A return to 7,000, that's a 124% gain. And the really bullish case, $10,000 ETH, we're talking a massive 234% upside. So for them, this dip wasn't a crisis. It was, as one report put it, rocket fuel. Okay, so let's bring this all together. What this whole event really pulls the curtain back on is the fact that there are two completely different games being played in the market at the exact same time. You have one single event, one price dip, but two totally opposite mindsets. On one side, you have the retail perspective. The story there is all about fear, panic selling, and that horrible feeling of holding a bag. But on the other side, the institutional perspective, their story was all about opportunity, strategic accumulation, and just filling their shopping cart for that massive leveraged bet on the future. You know, one analyst put it pretty bluntly with this quote. It's provocative for sure, but it gets the point across. It's a way of saying that these moments of insane volatility, they aren't really about the destruction of wealth. They're about the transfer of wealth from the panic to the patient. And that really leaves us with one last crucial question to chew on. The next time you see a market completely freaking out, you got to ask yourself, is this just a crisis, or is it a carefully orchestrated transfer of wealth moving from the fearful to the strategic and setting the stage for the next big move? Definitely something to think about. Thank you for watching.